Okay. Good morning and welcome everyone to Junior Achievements JA Personal Finance Workshops. Today we have with us Ky Pegues from TCF Bank, and she is going to be presenting a session on credit and debit. And I'm going to turn over the platform to Ky. Welcome.
Thanks for having me, Michelle. And welcome everyone. I'm so happy to be here. As Michelle said, my name's Ky Pegues and I'm the Community Development Market Manager for TCF Bank here in the Mahoning Valley. You might not be familiar with TCF, but I'm sure you're familiar with Huntington. We will be merging with Huntington, and that will happen here in this area around the June timeframe. And I'll be doing the same thing that I do now. I've been in banking for 30 plus years, graduated Hiram College, and right after that went into Society Bank, which became Ky Bank. Just kind of was going to take a summer job till I figured out what I was going to do. And then I became the assistant manager, a relationship banker, eventually worked for Chase as a branch manager. And then I moved to a smaller community bank, which is now turned into TCF Bank. But what I do now is I'm a community development market manager. I look for collaborations with the wonderful nonprofit organizations that we have out there, including JA. I love it when I can volunteer with JA. We initially, my position was developed just to make sure that lending is available to all people, including those in low to moderate income census tracts. And it's developed to different collaborations to what it is today. So, which is today, what we're looking at is credit and debt. So today we'll be talking about, what is credit, what is debt, giving you some very real definitions and kind of ways to avoid certain pitfalls so that when you're, as you become older and 18 and above, you'll be able to make those great decisions when it's time to start applying for and using your credit. Okay, so we're going to put a PowerPoint on and go through the different screens. There'll be a question and answer session at the end. So if you have any questions, just write it down and we'll make sure that we go over those things. So today we're going to investigate the different types of credit and their costs and their benefits. Not all credit resources are bad. So in some cases, they can really work to your benefit and help you save money. So when you first think of credit, what's the first thing you think of? Credit cards, right? One way to think about credit is that you're spending future money now, okay? And what would happen if someone made an expensive purchase using a credit card and didn't pay the bill? Oh, well, you owe a lot of money. You'd have to pay a lot of fees that maybe you didn't bargain on. So that's what we're doing today. We are going to explain what those terms are and how to use them. I'd like you to understand what credit is, understand what debt is, and understand what interest is. So next screen. So let's talk about credit. Credit is the ability to buy goods or services now, but pay later. So that's simple. You're just looking at something that you want now, pay for it later. Next screen. What is debt? Debt is just money owed. Okay, very simple. But each one of these, you're going to see a lot of items roll under what debt really is. And then finally, what is interest? Interest is payment for the use of money. It's a fee paid to use someone else's money or money earned from allowing someone else to use your money. Note that you can be given credit. So you can apply for and be given maybe a $500 credit card, but you don't actually So you have credit, but you don't actually accumulate debt until you use them. So we're just going to launch right into a video by David Paul of American Honda Finance Corporation, and some very real questions and answers. He does a great job explaining everything. So thanks, Michelle.
We've got a few minutes to
It's only
become
7
smart
minutes,
credit.
so it'll be quick.
Can you help us, and are you up to the challenge?
Well, Malaya, I hope I can. That's a big challenge, but you know, this is one of those topics for young men, young women like yourself that's not talked about enough. Very important area, so hopefully I can help out.
So tell us a little about yourself.
Well, I'm married, father of 5 children, and I work for American Honda Finance. We do the financing for Acura and Honda cars. So basically my job is to help the dealers get the money they need to run their stores and sell cars to consumers, and to give consumers the money they need to buy the cars, Hondas and Acuras.
You probably don't get a lot of high schoolers buying new cars, right? Why do you care about high school personal finance?
Well, you're right. We don't see a lot of high schoolers buying cars, but I think a lot of them would like one. I think you'd like a new car. Yeah. But we are very concerned because, Malaya, you and your friends are the car buyers of the future. And I think sometimes the youth don't realize that the choices you're making today actually can impact your ability to make a car purchase, a home purchase, other big purchases in the future.
Let's start with the basics. What is credit?
Well, credit, the basic idea is someone's going to lend or give money to someone with the idea that they're going to pay it back, agree to pay it back over a certain period of time.
That's amazing. Somebody's just gonna give me money and I get to pay it back later?
Well, hold on a little bit. It's not quite that easy. I know that sounds great, but the fact is there's a lot of risks involved with this process, but there's some benefits too. Let's discuss some of those. First of all, having credit, it's very convenient. Sometimes using cash, it's not as safe, and it's nice to be able to, in emergencies, have an ability to have a credit source of money available to you. Also, as we talked about, making big purchases, having credit, one of the benefits of buying a car, home, schooling. Can't necessarily always save enough to get for those experiences ready. It's nice to have credit to be able to do that. Also, it's important to establish something, a real benefit is something called credit history, showing your ability to make payments. As you establish that, then more people are willing to lend money to you in the future. In fact, we even find some employers now are actually using a credit score, credit history, as one of the qualifiers for hiring for a job. So being prepared with that is another benefit of having credit. But there's risks too. On the risk side, it's really easy to make impulse purchases. You get that little piece of plastic in your hand, doesn't feel like real money sometimes, and you can maybe buy more than you can even afford to pay back later. Also, it can get complicated. There's a lot of fine-tuned small print sometimes, details that you don't maybe understand that you're getting into, so you got to be really careful. So those are some of the risks. Benefits and risks, but you need to be aware.
How can institutions afford to give everyone money? Aren't they worried some people won't pay them back?
Well, you're hitting the heart of it right there. The fact is we can't. We can't afford to give money to anyone that just comes along that wants to get money from us. We have to be careful and make sure that we're giving money to those that have the ability to pay us back. We're taking a risk when we give money to someone that they're going to pay us back later. So we need to determine who's safe to lend money to and who will be able to pay us back.
How can you guess just by looking if someone will pay you back a loan?
Well, luckily we don't have to guess. We look at what we call their credit history, their past experiences with credit, and how they've paid others in the past. So we can make a very sound judgment decision whether we should lend money to them.
I don't have any credit history. What should I do?
Common problem for young people like yourself that you don't have credit to begin. There's a couple of good ways, though, to get a start at it. First, often someone will go to their parent, maybe an older brother or sister, and have them co-sign. Line up alongside of them on the loan, and you can pay yourself and establish that credit record, but use the strength of someone else to get going. Another way, often in college years, you might get a credit card or something. It's a very simple first step, but there you got to be very careful that you make sure that you're making payments on time and paying off the whole balance and show that you really can make payments and reliable and build a good solid credit history. those are a good couple of ways to get started.
What are some mistakes that young buyers make that can affect them later?
Well, you know, there's a lot of mistakes that can be made, but let's just look at an example, maybe one of the more common ones. As an example, let's look at 3 young people buy a cell phone. $300, they all paid the same amount, and they all borrowed money to pay it. First example, they paid it off right away. So no interest accrued, they immediately paid it off after they borrowed it. So $300 is exactly what they paid for the phone. In the second example, the person just made their monthly payments, paid them all on time, as scheduled, about $10 a month. And so over 3 years, they will have paid about $350 for that cell phone. And they would have established some good credit, but they would have paid some interest on top of it. Third example, and this is where the big mistakes come in, is someone who only paid the bare minimum amount that they could each month and missed a few payments along the way. Now, as you can see, when this happens, they not only go longer on the loan, they also hurt their credit history because of not paying it off fast and missing some, but they actually pay $420 rather than $300 to get that phone. So different ways to handle credit. You got to be careful and make sure you're being on time and very careful in your payments.
What is a credit score?
Well, a credit score, it's a lot like your grades at school. You get grades for each of your classes. GPA, it's culminated to an overall GPA that you have in high school. Credit is looked at by all the different experiences you've had, different payment histories, and we combine all of those to an overall credit score. The higher the score, the better it is. Now, not every lender has the exact same cutoffs, but commonly it's in this general area. Roughly a score of 720 to 850 would be like an 8+. Score in the 700 to 719 range would be an A. B+ would be like a 675, 699. 620 to 674 was a B. I think you get the idea.
Yeah.
C and D down. We'd love to see people obviously have stronger credit scores. And those that have a higher score are actually rewarded often with a lower interest rate. Those that don't have as good a score, sometimes it's harder to get credit, and sometimes when they do, they have to pay a little higher interest rate. So the higher the score, the better off you are, and it's an important feature. And in fact, I often recommend to people that are going out to make a purchase to look up their score and know what it is before you go. So you can be more in control of the situation. Be aware of where you are so you can know what your options are.
Well, time's up. That's a lot of information in such a short time. Thank you.
Well, thank you, Malayla, and good luck to you and all your friends.
Okay, hey, that was a really a great video. I love the way it talked about the advantages of having credit and then those pitfalls that can happen if someone is risky, takes risks with their credit, and what might happen. So people just really need to be careful about when they choose to use credit, and it's just how critical it is to pay the debt on time. Next screen. All right, so I like the way that Mr. Paul talked about the way that lenders, what information is necessary for them to make a lending decision, for them to decide if a person qualifies for credit. How we need a reliable source of information about the past behavior when they choose who they're going to lend to. And that's why your credit history and your credit score are so important. When you look at your credit history, which you can pull up a credit report, there are 3 major credit reporting agencies, TransUnion, Experian, and Equifax. You might have heard those 3. So you are able to go in and pull up your credit at least once a year from each one of those sites or through freecreditreport.org once you turn 18. And then she also spoke a little bit about the credit score and how it's a standardized measurement for the potential for a borrower to repay the debt. So we're just going to jump in with the importance of your credit history and your credit score. So credit history, it's just so important, again, to handle credit. Of all of the modules that you're going to be watching, information about your credit really ranks up there because it's something that you need to learn right at the beginning. Because if you learn that lesson later, you're going to kind of pay it back the hard way, as they say. So the importance of the credit history, it's just important to build that credit and not have any negative marks show up on your credit score. The history will show your credit history and who that credit has been extended to, in the similar way that a judge would score an athlete on the Olympics. A credit score, that's the standardized measurement of the potential for a borrower to repay a debt. Just remember that it's a risk for a lender to lend the money. So there's always a chance the money might not be paid back. So the credit score provides that lender with data to decide how much of a risk they're willing to take. So we'll talk about thinking like a lender. I mentioned about how a judge at the Olympics could award a 10 for a great performance. Well, your credit score, much the same way. He talked about those scores ranging from the low 4s up to an 820, which is the best possible score. If you handle your credit history correctly, you could be looking at a 10 on those credit scores. There is an interactive portion to this presentation. We're going to skip right through it a little bit and just talk about what credit is, again, what the lenders look for. They're going to look for that payment history and make sure that you make those payments on time. There's two types of credit. There's revolving credit, which is what a credit card is. And the reason we say revolving is because if you have a balance every month, you're continually going to be paying that bill. It'll set out there, hopefully with a zero, without a fee, and then you would use it when you need to use it. And then there's installment credit where you would borrow a certain amount of money and pay it back over a fixed number of months. Like if you buy a new car, possibly paying 5 years for that vehicle or 60 payments. So we just want to make sure that we look at or we remember those certain things about what the lender is looking for. Oh, excuse me. All right. Next screen. Okay. Okay, we talked about credit scores, how the lender, that's the decision that the credit score will help the lender make that decision. How much buying power are they going to extend to that applicant? There's a certain formula that your credit score is based on. It starts with your credit history, but then it also will talk about how you're using your credit. Let's say we've talked about that $500 credit line. Do you owe $0 on that credit line? Do you owe $100? Or do you owe $490 on that credit line? Or how about $520? So when they see that you're close to that credit limit or you've exceeded that credit limit, that's a negative mark against your credit history. You'll also learn, or excuse me, the lender will also look at how long have you had that credit. What's the oldest date of your credits, of a credit that was established for you? You want to make sure that once you start establishing credit, that you keep that credit well. You're paying as agreed, and you want to hold on to that one because that is the date that you first established your credit history. Though we talked about the ratio of credit available and having the same credit accounts for a long time, that will help your credit score. Well, you can also talk about making sure that you're checking on your credit regularly, that that there's nothing popped up that should not be there. We talked about how you want to keep those certain credit cards open, those ones that you established earlier on, and use them regularly over a period of years. Student loans, as you graduate from school, you'll be looking at possibly having to take a student loan out to pay for your schooling. It's very important that once those once that loan goes into repayment, that you start making those payments, or even more importantly, if you haven't found a job yet, or perhaps you're thinking about going to school and you just don't have that money, that you contact that lender, you contact who gave you that student loan and make arrangements, possibly ask for a deferment, because if the loan goes into repayment and you haven't made those payments, that is a major derogatory effect on your credit history. So we want to make sure that should you have to take a student loan out, that's something that you watch and you monitor very carefully. And the best advice I could give you there is, as you do well in school, and it's time for college, really research those grants and possibly scholarships that might be available to you, so you can avoid the whole student loan product altogether. Of course, there's other ways of lending products out there, such as payday lenders who offer very high rate installment loans. So you want to make sure that you're avoiding that pitfall and ask yourself, do you really need these monies, and what is another way that you could get those monies? Rent to own shops, where you really want a couch set but you just don't have the money. Some people look at those rent to own stores as a way to get something nice today. If you can afford it, a much better alternative would be to put that on a credit card or use a store's credit, or even better than that, save up for the product before you buy it. Should you go to one of those rent to own places, check into to see if they have 90 days, same as cash. What that means is, if you're paying $500 for a furniture set, and they'll usually give you 90 days to pay that before that high interest begins. So we went over a lot. If you have any questions, I'll surrender this over to Michelle and ask those, and I'll do my best to answer them.
Wonderful. Good information for those that are starting out and need to, build up their credit card scores. This is great information. So let me get to the questions. So how does someone in high school start to get good credit?
Well, as I mentioned at the beginning of I might have missed that. You want to wait till you're 18 to start looking at different credit opportunities. The credit bureau will not report any credit history prior to age 18. But after 18, you could do a few different things. As I mentioned on the video, you could start with like a store credit card, like a Penny's, something like that, a jewelry store. If you're looking, you could ask to be a cosigner, your parent to be a cosigner, or a guardian, or an uncle or an aunt to be a guardian on possibly a car loan that you're looking at. Or they have what's called secured cards. Let's say you've saved up $500, you want a major credit card. You could go into different banks, which TCF has one, where you could ask to put up your $500 and then they're going to give you a $500 credit limit based on your own money. So those are just a few ways. And don't forget your student loans. Those are very easy to obtain, but they will show up on your credit report, and it's very important that you handle those and monitor those correctly.
Oh, good point. Good information on the student loans. That also affects your credit score. So I'll combine these two questions together. Is there any credit card specifically for young students, younger people, or are there certain credit cards better than others?
Oh, yes. Actually, it's pretty easy to get certain credit cards once you're in college. They're called student loan visas or student loan MasterCards, and most major banks offer them. But because they're easy to obtain, sometimes they're very easy to work them the wrong way as well. They come with a little bit of a higher interest rate, and usually you have to show, or you might be requested to show your school schedule, email it to an underwriter, something like that, perhaps even show your grades. Those are easy to obtain, almost to the point where they're like candy. So make sure you limit your choices and you look for the better cards as opposed to one that might not be so good. For example, look for annual fees and look for high interest rates. You want to avoid those, and the best cards have no fees and a very low interest rate. You could look at interest rates going from 0% for a certain number of months to possibly 26, 30%. So think about that as you're looking to choose which credit card you want. And if you don't look at those things now, your choices might only be a higher rate interest card. So, and a good thing too is talk to your banker. Ask your parent, your guardian, and uncle, aunt, visit your bank if you're allowed inside now with COVID, but usually your banker can steer you to those best cards as well.
Yeah. And then that is great advice too, to look at the fees and the interest rates, because I know credit card companies are very good at saying, like, if you go to the mall and you go to American Eagle and they'll say you purchase something maybe for $40, they'll say, well, if you sign up for a credit card, you can get $10 off today. And I always have to tell my children the same thing.
Oh, yeah.
Is it good? I mean, that's an impulse buy right then and there. And you don't know what the fees are and the interest rates are. But is it, should you have multiple credit cards, or should you recommend just having one and just use that as something to build credit? Is it better to have
I'd recommend
multiple,
no more than one or two. Well, it's always, yeah, I'd recommend that it'll be hard to get a Visa or MasterCard at the beginning. So that needs to be your goal. Everyone should have at least one major credit card, because you're going to need that to rent cars, to use to hotel rooms, emergencies, the car broke down. You need one major credit card, and then limit your cards as far as the stores that you ask for. It might be a well-rented store like Penny's or Sears. Pennies, but you don't, as Michelle mentioned, like going into one of those smaller stores. It's going to be easy to get that card, but then you can only use it at that store. So limit your choices and no more than two or three.
Okay. Another great advice. I think when you have multiple credit cards, it gets a little bit hard to manage your payments. And we get stuck into doing the minimum payments, and it's a good idea to at least try to keep paying off your credit card each month. So we have another question. I'm afraid of getting into debt. Any advice to avoid debt?
Yeah, it's once you're in debt, it's hard to get out of it. It's like climbing a mountain. It can feel like climbing a mountain. And that's why it's so important that when you see those minimum payments come in, that you pay what you can afford. And even more than that, think before you buy, as Michelle mentioned, those impulse buy purchases. So if it gets to the point where you do need to put something on the credit card or take a loan out, you want to make sure that you pay a payment that will, you can afford, and that will pay you off as soon as you can. Paying those minimum payments will sometime increase the time that you owe up to 20 years.
Okay. Well, that's all the time that we have for today for questions and answers. But if you do have additional questions, you can reach out to the Junior Achievement Office, and we will be happy to answer those questions for you or give you contact information to our featured speakers as well. But Ky, I want to thank you for your time today. This video has been recorded, and we will be uploading it for those that were unable to participate to watch the video later. So I appreciate your time today and great advice in sharing on how to work with credit and to build your credit score. It's very important information when you're starting out young.
Thanks, Michelle. It was great being here.
Okay.
Good luck,
Thanks,
everyone.